let us look at what are assets. So, what are assets? Assets are economic resources. These are economic resources controlled and owned by an organization as a result of past event. So what we are saying is that assets are economic resources because they are items of value. They must be owned and controlled by the organization. To mean, these assets must belong to an organization. And they must also be used by the organization in terms of control. Then these assets do not just occur in an organization. The assets have been purchased or have been donated to the organization. That's why we say assets result from past events. They are a result of a past event. That is, a past event, something must have happened in the past for these assets to be there in an organization. Let's have characteristics of assets. Characteristics of assets. Assets have three main characteristics. One is that assets are economic resources. Assets are economic resources. That is, they have value. Assets have value. In other words, these economic resources, to mean, when you dispose assets, you can actually get some value. You can actually get some funds out of these assets. So we say they are economic resources. We also say that in their characteristics, assets are controlled. Assets are controlled and owned. Assets are controlled and owned by a business. For instance, if we have land, this land, for it to be said to belong to a certain organization, it must be owned by that organization in terms of title deed. If it is a motor vehicle, it must be owned in terms of a logbook by the business. Then it must be used by the business. That's the element of control. The third characteristic is that these assets have resulted from past events. These assets have resulted from past events. When you say they have resulted from past events or past transactions, we mean that these assets did not find themselves in the organization naturally. Something must have happened in the past for these assets to belong in a certain organization. The last one is that assets are used to generate. They are used to generate or to aid in generation, to aid in generation of revenue. So here we mean that any asset you have in the organization, it will qualify to be an asset if that asset is being used to help the organization to generate revenue. In other words, the assets are used to help the organization make sales. The assets are used to help the organization serve customers. And then we have sales as the income or as the revenue. So these are the main four characteristics of assets. They are economic resources because they have value. They are controlled and owned by business by the virtue of being that they belong to the business and the business is using these assets. They have resulted from past events by the virtue of being that these assets did not naturally find themselves in the business. Something happened for them to belong to that business. Then they help the organization. They either generate directly or aid or help the organization to generate revenue. We can have an example in a school setting, a classroom, which is actually a building. This classroom will be helping the educational facility or the educational organization to generate revenue by serving the customers. Hence, it will qualify to be an asset. Let us look at the classifications of assets. Classifications of assets. Assets can be classified into two broad categories. One, we have what we call the non-current assets. We have what we call the non-current assets. These were previously called fixed assets. And the main reasons why these assets were being called fixed assets, it is because majority of these assets were immovable. They were fixed on the ground. They couldn't be moved. So these assets, they were referred to as fixed assets. Only for accountants to agree that even some assets that are said to be fixed like a motor vehicle still are movable. Hence, the name was changed from fixed assets to non-current assets. And the non-current assets are defined as assets that are expected to be utilized in an organization for a period of more than a year. So these are assets that are expected to last in an organization for a period of more than 1 year. And we have examples. We have examples. Examples of these assets, we have one, land and building. We combine land and building because buildings do not exist where there is no land. Most of the times, buildings are attached to the land. So these ones, we combine these to be one category, land and building. Even though when you are doing financial reporting, you can report separately land, which is land that does not have building, and you can also report the other land that has building. So majorly, we combine the two and say the value of land and building. Then the second one, we have what we call tools and equipments. Tools and equipments. Tools and equipments. Under tools and equipments, here is where we find tools that are used in an organization. Tools like hammer, chisels, and then you have equipments like generators. Any equipment that you use in an organization falls under tools and equipments. Number 3, we have what we call motor vehicle. We have what we call the motor vehicle. We have motor vehicle. Motor vehicles, of course, you know what are motor vehicles, and this also sometimes includes the motorcycles. These are both all motor vehicles, and the motorcycles sometimes are classified under motor vehicle. 4, we have what we call furniture and fittings. We use the name furniture and fittings because at times you realize that if you have a furniture like a door, the door cannot exist without a door handle or a lock. That means the lock itself is metallic, it's not furniture. So the lock is a fitting. The lock of a door is a fitting. You also find there are some metallic elements in the door, like nails. Those ones will now be classified as fittings. We have the furniture, which is actually the timber, and we have the other part, which is actually a fittings. Last and not least, we have what we call plant and machinery. Under plant